For sure. So these are just, this slide right here, these are just generally speaking, what an investor would look for when you're going through your pitch. And depending on, which stage and which investor you talk to, each one will kind of, have a different preference for the different order. So then I usually just say, include it in whatever order that you feel most comfortable in pitching. So some people really like starting with the problem, like, what is the problem that I'm solving today? And then they want to go into, why our team is best positioned to solve the problem. What is the solution to the problem? And then kind of get into the financials and how they grow, and then kind of finish the pitch with, in order for me to grow and get to the next step, this is how much money I need, and this is how I'm going to spend that money. But if you talk to some of the different investors, some people might say, no, I actually want to know, like, what is your product first, and then kind of dive into, the problem that you're trying to solve. But generally speaking, this is the way that brick and mortar likes to see the flow. And Vivin, with Hilti, you might have a different kind of preference.
Yeah, and for me, that's the difference between strategics and financial investors, right? So for strategics, we're driven by which area we are looking to get into. So the topic is much more interesting than anything else in the stage or the team that is doing it at that point in time. Because unless there's a fit, we won't look at that. And then once we look at the fit and we know that's a problem that we're interested in, then we start looking at the technical expertise. We start looking at, okay, is this a viable product? And our focus is much more on the product than the market reach or the growth, because Hilti has that to provide you the growth and so on and so forth. But that is not a typical VC, right? A typical VC will look much more holistically in terms of your development, your roadmap, and so on. And Alice said this differs by stage. I would say very early, it's mostly the team. And I would say it's mostly the team. If you're super early, it's nothing but the team. And then you talk about product, the problem that you're solving. And as you evolve, then you start talking about metrics, your growth metrics, your sales trajectory, your go-to-market plan. And it's an evolution over a period of time. And it's slightly different for different industries, but by and large, I would say this is the way it goes.
Mm-hmm. Yeah, and I would say for the startup challenge in particular, because it's just a 5-minute time frame, the focus will probably be more on the problem that you're solving and the product, with the team kind of either in the beginning or at the end or somewhere in between. The team is also important because it helps highlight the skill sets and who contributed what and how much each team member contributed. But I think the key thing would be the problem and the solution for the AEC Hackathon Startup Challenge.
Totally agree with you there.
Other questions?
And if you don't feel comfortable asking questions in front of the whole team, Vivin and I have both been in the Slack in the, I think, Mentors Business channel. Feel free, like our emails are there. You could feel free to, DM us or email us, and we're happy to set up like a separate meeting if you want to have like, a pitch run through or something like that. We're happy to help.
Okay, it looks like Melissa has a question. Go ahead, Melissa.
Hi, Damon. Thank you. This is great information that you guys are providing, and it's super comprehensive. I've recently been, I've actually participated in 2 VC pitches, and that I learned a lot, and listened in on to an additional one. And this is great information, just bouncing this off. And Vivin, are you in the, I'm sorry, I didn't get to do my research on you yet. Are you in the construction business? Did you say Hilti?
Yes, I lead the corporate venture arm for Hilti. So
okay.
Yes, we have the construction business.
Okay, great, great. Yeah, I don't know. I'm just really psyched to be hearing all this information from you guys. And I started just this morning to prepare forecasting and cash flow projections. But now you just told me that this 5-minute pitch will be for problem statement and product, and basically talking about the team. So that's very helpful.
So let's also rephrase that, right? It's not bad to have at least an understanding of how you make this business work, right? But don't just make it a focus of your presentation, because right now you are at the starting point where the nucleus has to be the problem and the product that you're building. Mm-hmm. And then you can always say, based on this is how we intend to grow. This is the size of the market. This is why it's attractive. And all of those are good things to have. But the defining part of what you present will be the problem and the product.
Okay, thank you so much.
And Vivin, why don't you give a brief introduction on yourself, since
Fair. So I co-lead the corporate venture arm for Hilti. So Hilti is a tools and services company, and we're about 30,000 people, 6 billion in sales. We've been in construction for the last 18 years. And I look at investments, acquisitions, and partnerships for the company. So we look at new trends in construction that helps us come up with new products, but also helps us bring new technologies to the industry. So I've been with Hilti for about 7 years in various roles. I've been in strategy, I've been in sales, and now lead the corporate venture arm. And before Hilti, I was with McKinsey for about 6.5 years.
Great intro. So more questions. I guess if folks want to use the hand raise feature, it looks like we have something here in the chat. Would you like to share any favorite industry research tools, platforms, or websites?
I think it depends on what kind of information you're looking for. Just generally speaking, a lot of the big trends in the construction space, a lot of the really good research is from McKinsey, so Vivin's former company. And I'm not just saying that because he's from there, but
because
McKinsey has been, McKinsey has been kind of the leading and the closest to kind of the construction and engineering group in terms of, what are the trends? Like, is it robotics? Is it, prefab? And I think most recently, if you go on their website and sign up for some of the newsletters, there's been a lot of really interesting stuff around COVID-19 impacts on the space, and what are 7 key technologies that we see are going to be very popular coming out of COVID-19. So from a very high level perspective, I would say McKinsey has pretty good stuff. If you're more interested in like the startup and construction tech side of things, I don't know if there are any really good kind of tools, platforms, or websites. The Society for Construction Solutions is a good networking event to get to know other founders in the like AEC tech startup world, investors and lawyers and kind of people within that startup ecosystem. Attend those types of events. So that's a Society for Construction Solutions.
Yeah.
Vivin, do you have anything to add for this?
So a couple of things I would add is, one is BuiltWords. I think BuiltWords is a good forum where they both present research on construction related topics. And it's also a networking forum where different companies come together, whether it's startups, it's construction companies, all of them come together. And that's one forum. From a reading perspective, Construction Dive is another newsletter that you can get into. They have some interesting articles on construction tech in general. There are also a couple of other forums that could be interesting from a robotics perspective. There's a construction robotics forum that is good to be a part of. Generically, a TechCrunch is also good, but I think the focus on construction is not large enough to say they will be a very filtered source of information for you. Similarly, CB Insights sometimes comes up with good information, but again, it's not filtered enough. I would say only 5% of CB Insights reports are really helpful when we talk about sources. But I would say BuiltWorks and Construction Dive are two I would follow, and then Society for Construction Solutions for sure. And from a research perspective, it's probably McKinsey. And then if you want to look at SciFi has some good presentations and reports coming out maybe a couple of times a year. But those are the forums I would say you can track.
Yeah.
Go ahead.
I was gonna add for like podcasts. I know there's a new Construction Dorks podcast, which is, I would say it might be a little bit more focused on MEP. And there's of course Contact Trio, Contact Crew. So there are a couple of podcasts out there that kind of focus on construction technologies.
Yeah, I would also just say for those that are interested in more of a global look, AEC Business is a good one that's not so US centric. So Arnie and whatnot has a pretty good scope of what's going on in the European market, and then also others that kind of get neglected by some of the folks that are here in this market. We had a hand raise from Jose. So Jose, if you just want to unmute and ask your question to our experts here.
Hi, Alice, Vivin, you hear me?
Hello. Yes, we can.
Yeah, we spoke last week, and I wanted to ask you, I think it's not on Alice's topics on the pitch, but something I was curious about is, I have some questions about, is how do you approach competition from when you're building a startup, and like what do you look for when analyzing competition? Like what should I be concerned regarding that VCs might be interested to know? Because most of the times are people like yourselves that are pretty they're into the market, so they know who does what. So what should I be concerned about in terms of competitions for like differentiating my startup?
Yeah, I would say don't assume that people know the competitive landscape, because like Vivin and I are very unique in the space, that in the sense that we actually like just focus on the space. But as you continue to raise money, and it's pretty good to get a mix of industry focus and non-industry focused investors in the mix. So I would say don't assume that everyone will do their research at least from the first pitch perspective. Don't assume that everyone will do their research on all of the competitors. So it'd be good for you to have a competitive landscape slide of some sort in your pitch. And from a differentiation standpoint, it's going to be different depending on what stage the company is in. At least for us at Brick and Mortar Ventures, we're fine if there's competitors out there for whatever the startup is working on. What we look for is the ability for the founder and the team to continue to change and pivot and kind of continue changing as the market changes, and continue growing the company at a fast speed. So for us, we really look at progress and growth and how the founders kind of, continue changing to market demands. So even if there's, say, 3 companies doing the same thing, we're still willing to make a bet on a company if they differentiate themselves from the other ones more on their execution rather than, like some, new feature or something like that, because features can get built very easily, unless if there's, some core IP or some, really deep tech, focus on that startup. I would say like our focus is still more on the like execution of the team.
Cool.
I'd say there are 2 parts to it, right? The first part is understanding the differences. So do you truly understand the problem that you're solving, and what is it that you're bringing that differentiates your solution? And what problem are you solving, right? Is it from the tech aspect? Is it from understanding the market aspect? Is it from the execution aspect? Knowing your own strengths is critical. So that is the bedrock of any competitive analysis. And then you look look at the market and understand what others are doing before you say, okay, this is where I'm going to be stronger and this is where I'm going to outperform everybody else in the market, regardless of what stage of evolution they are. So understanding that will be the basis of you telling your story. And then there's the second part of communicating this to the VCs, right? VCs, in some cases, are actually happy if there's competition, which means a market exists, right? And the market existing means the time is right. You're not too early, or if there are too many, then it's a problem. But if there's a few, then it's actually indicating that you are onto a problem that others recognize as well, right? Then it's a question of saying, okay, why you're going to deliver this better. And Alice said it could be just execution based on your team. But you need to understand what are the one or two things that will make you stand apart from everyone else in the market.
Thanks.
Any more questions? All right, well, while we wait for folks to ask questions, I know this is a question that actually gets asked a lot. I don't know how well this will apply for the hackathon, but a question I hear all the time is how does one go about divvying up equity, right? When is the right time to bring someone as a founder? When is it to bring them on as an employee? So as, again, maybe not for the pitch, but just kind of what are some insights that you can offer that as someone's forming a startup, what's the right way to handle that?
I think Vivin, you might have more experience here.
So, like everything, it depends. So it's not an answer that you would like, but let's start off from the creation process, right? Typically, when we look at startup teams, we look at teams hopefully with more than one founder. We look at teams which have at least two founders, sometimes maybe even three founders, so that they have the capacity to develop a product solution over a period of time. So until you at least have some form of a product that you have tested and gotten some feedback, you don't want to either give away equity or think of fundraising, except from friends and your family and so on, right? Once you have the solution, you have tested it out, and you have had some customer feedback. I would say this is not systematic customer feedback where you go to a very large company. This could be a small job site right next to your house where you've actually spoken to a friend and tried to get some product feedback. That's a stage when you're trying to get some market feedback, and that gives you input whether this is feasible or not. Before that has happened, you don't want to hire anyone, you don't want to dilute anything, and so on and so forth, right? Once that traction has happened over a period of 3 to 6 months, you probably develop the solution further, refine it, start talking to industry experts, reconfirming whether this problem is a genuine problem. So you have the reconfirmation of the problem, you have a initial indication that your product works, and at this stage is when you start thinking about, okay, I take a little bit of funding, primarily from pre-seed or angels, to make sure I have 6 months of time to get to a stage where I have a robust enough solution. And this is the time when you start thinking about dilution. And I don't worry about dilution too much at a very early stage, right? You would rather have 50% of a viable business than 95% of a business which will not work, right? So initial partners that you're getting are very, very important. You have to select your angels or advisors very, very carefully, because they have to add a lot of value to you at that point. They might be the difference between you surviving as a startup or you not surviving as a startup. So that the question is value versus the equity that you're giving at that point. Having said that, you don't want to give away 80% of equity in the first 3 years. That should not happen. The rough metric would be that by the time you reach Series B or Series C raise, the founders have at least 15 to 20% equity, each one of them individually. So overall, if they have 30, 40%, that means they still have enough stake in the game to keep pushing the company forward. But it's not something you should worry about too much before you have reached the stage of product definition, and you have enough validity that the problem statement is worth solving.
Yeah, and I would add that, even at the early stages, trying to preserve and allocate equity for additional kind of early high-level employees is pretty important. So, there is risk to joining a startup. So if I was, a 30-year kind of industry exec, why would I want to go join this startup when I could have, this cushy job at, Autodesk or something like that, right? Startups definitely still need high-level execs or people with experience to help run the company when they get to a certain stage and need to grow. So it's pretty important to preserve, some equity that you could be able to give away to entice some of these, higher level execs to come join the company. So I think the equity thing is pretty important. And I think in the AEC space, what we've seen more of are startups that are trying to spin out of large companies. And I think having the conversation around equity there is pretty important, because some of these large companies, if some idea was incubated and developed within this company, those companies try to maintain, a high level of equity, or they try to maintain, a lot of, ownership of, board decisions and stuff like that. So this is going to be a completely separate kind of conversation. But a lot of the reasons why some spin-outs fail is because there isn't enough equity allotted to the founding team, so that they have kind of the incentive and the drive to continue building and growing a company into a billion-dollar company, rather than, some person who just continues to get paid by this large company to, just grow this type of business organically or something like that. So for the AEC space, I think there are a lot of potential spin-out opportunities, or, even if some of you guys in the audience, if you start developing something in-house at some AEC company and it gets to a point where, leadership is like, okay, we, think there's an opportunity here. Equity is a big part of that negotiation between this large company and then bringing outside investors in and understanding who owns how much of that new baby startup that's going to get set up. So this is going to be if we got into this conversation, it'd probably be hours long. So at some point when it makes sense, feel free to reach out to Vivin and I, and we will have the conversation with you.
And that was an important point, Alice, as in both the employee equity pool as well as corporate ownership, I think are important aspects to consider. And just to emphasize Alice's point, right? If a corporate has a significant share when you are starting your startup, the VCs will not touch that investment. They will not come close to investing. So if you're spinning off, you better have a very small ownership by the corporate. Otherwise, you'll find it difficult to raise money.
All right. So more questions, or any other questions from folks, just please raise your hand. We have had a couple more jump in here in the past few minutes. While we wait for that, what are some major, would you say are the top 3 don't do's when doing your startup pitch or something like that? I know you kind of mentioned this a little bit, but just to drive home the points, right? What are the things that, maybe you see a lot of and you're just I don't know where people got that idea, but that's not the best way to do that. So what are some things you'd share?
I can talk about general pitches, not about this specific audience, because you don't have that time to research.
General pitches, yeah.
So I think 2 things people don't get right is, one is pitching at the right level. For example, they'll either be extremely detail oriented or they will present at a very high level. I'll just give you the example of business plans. Some of them want me to go through the Excel sheets during a short presentation, and that's not what I'm looking for at that stage. The others just say, okay, this market is 10 billion and that's why I'll have a business of 2 billion out of this, without giving any justification or assumptions. So pitching at the right level, giving the right kind of detail, right kind of assumptions is very important. Otherwise, you put people off. The second is know who you're talking to, right? For example, Alice is a financial investor, I'm a corporate investor. If you come to me and try to pitch a healthcare startup saying this is going to be the next unicorn, regardless of how attractive or how good your offering is, I will not give you a second meeting because I don't have a mandate to invest in that space, right? Neither will probably Alice because she also doesn't invest in healthcare startups. But knowing your investor, what's the background, what stage do they invest in, what's their thesis, doing a little bit of this research is very helpful in making sure that your meeting is productive. And a lot of them do this research, but they're also quite a significant part of startups who just do spray and pray. They just reach out to anyone and just hope that they will respond and give time.
Yeah, and just adding on more, not like what not, well, partly what not to do and partly just tips. I would say define your acronyms. A lot of the times the investors, for us, we know what, BIM is, and we would know what, digital twin, blah, blah, blah. But actually, even digital twin is a good one. Everyone has a different definition of what digital twin is. So like if you say, oh, we're doing digital twin for X, are you just a, 3D representation, or do you also pull in, a ton of IoT data? So I think like if there's any type of industry buzzword or acronym, it would be good to define that and just make sure that everyone's on the same level, and like everyone has a good understanding of what you're actually talking about. And another, I guess, like problem that I see with the pitches is that, they may say like, oh, our total, the global construction industry is $10 trillion. And that is our market. But in reality, for investors like Vivin and I, we're pretty familiar with the industry and how it gets broken up. And not every startup is going to be able to, tackle that entire industry, right? So I think it's being reasonable and transparent around, which industry you are targeting first. And even in particular, which stakeholder are you targeting first, and then have kind of more of a plan on how you're going to continue growing and getting more customers either in adjacent industries or whatnot. So a lot of the times I see, people just throwing, big numbers on their slides and, saying, oh, well, McKinsey said this, so I'm just going to use this number. Like, yes, that is fair, but it's still a very high level number. So you might need to kind of go a little bit more in detail. And at least for, industry focused investors, we want you to have a, good understanding of what that market actually looks like. Or if there's like any terms that we've used that is confusing, I'm happy to explain, because I only joined the venture capital world a year ago, and I had to learn all of this stuff. And before I joined, I didn't know what the hell any of this was. So I know it's a very kind of convoluted space, and if you're not kind of in it on a day-to-day basis, it kind of looks like a giant black box. So I had mentioned this in the previous presentation that I think the construction technology, and I guess, I'll make it broader, the AEC technology space, it would do a lot better with more founders from the industry, just because the industry is so nuanced. So if this is something that you're seriously considering, starting some type of company in the space with a background from AEC, we are happy to help kind of provide any type of feedback, insight, or just, explain what certain things are, or point you in the right direction of, what might be good resources.
Awesome.